Robert Luna, however, of SureVest Capital Management says things have changed. Paul, to you first, make the case.
Hi, Maria. Listen, we all invest in technology for obvious reasons. Technology are emerging companies. They're on the cutting edge of the economy, and they have usually astronomical growth rates. By the time they start paying dividends, they're more mature companies. Many of them move from growth to value. And frankly, I don't think you're rewarded for the risk you take. I mean, just look at something like Microsoft and Intel. We just heard from Seema about how much they're paying in dividends. Microsoft, Intel, Cisco, Oracle. You go back to just 08, they were obliterated during the bear market, 50 to 70%. So if they paid a 2% dividend, that's very little consolation when your principal is more than cut in half in a short period of time.
Right, right. So, Robert, if you invest in tech right now for dividends, are you expecting to lose money on the stock return?
Well, I think it's a unique situation today, Maria, where technology, when you look at it today compared to other sectors in the S&P that you might normally look at to pay dividends, like, let's say, Staples, for example, this is a sector that's really pretty cheap. A lot of these big technology companies today are trading at single-digit multiples. So it's not like 2007 where maybe they were priced for perfection. And when you look at pure fundamentals, the balance sheets of these companies are pristine. Free cash flow not only supports the current dividend that they're paying, but also continues to support an increase in dividends coming up here over the next few years. So we think just as you have to look at, exactly.
No, please continue your thought.
Yeah, we were thinking, as an investor, it's just a different point in time. You have to think of things a little bit different. You used to think as bonds being the place to go for safety, and you thought of maybe Staples being the place to go for dividends. You just have to think a little bit different, and, the history rhymes, but it doesn't repeat itself. And we think today, if you're looking for safety in a market that's come pretty quick, that's a good place to get yield today.
Well, I guess one of the issues is that we've got so much cash on balance sheets, technology included, and, Paul, there's activist investors now reemerging that want that cash to be put to work. I mean, doesn't it become a problem after a while if you're sitting on so much money in cash that investors will push for a dividend or some kind of shareholder-friendly move?
I think the problem, actually, I see it as a different problem. If you're a technology company and you've been achieving these fantastic growth rates, and all of a sudden you say, I get all this cash, and the best investment I can make is to pay out a dividend instead of invest in my own company, I scratch my head. I don't get it. I understand that people have gone from treasury bonds and CDs to corporate bonds to high yield bonds, and now they're into dividend plays. This is going to end horrifically for the individual investor. Tech stocks are still aggressive. They're high beta, if you want to use our Wall Street jargon. They don't belong in the hands of folks who are used to buying stodgy old utilities and stodgy old companies. It's going to end poorly. I understand. In a well-balanced portfolio, could you carve some out for some tech stocks that pay high dividends? Sure. But in the end, when the next bear market comes to roost, and I think it's sooner than later, these techs that forget about 2008. Look what happened to the bear market of 2000 to 02. Bear markets will devastate these tech stocks, and I don't think the average person is ready for that.
Can you really put all these names in the same basket, though? I mean, Apple went public at $22, right? I mean, Google went public at $79. Look at where these stocks are right now. They've been fantastic investments. Why would you differentiate technology being some different basket of companies?
Because they were amazing performers before they started paying the dividend. Apple started paying the dividend. Look where the Apple peak was. I still say that if these companies are so wonderful, they should have a better use of the money than paying it back to shareholders. Microsoft and Intel and Dell and Cisco and Oracle and Apple and all the others, they had amazing runs, and then they started paying dividends. Look where the peaks were. You can't tell me that it makes sense.
What about that? I mean,
Maria, I think comparing today's valuations in technology to 2000s really a preposterous correlation. I mean, these companies are nowhere near